Good morning and welcome to Digital Assets Daily. Hope you're having a beautiful day in your part of the world. So let's get right into the news. Hong Kong regulators to bring licensing to crypto exchanges. Hong Kong is stepping up its efforts to formally regulate cryptocurrency exchanges in the city. The Securities and Futures Commission's SFC just released a newly drafted regulatory framework which allows the securities watchdog to issue licenses to crypto trading platforms. Could this be a game changer for the crypto industry? As a leading global financial hub, what does the new regime mean to the city? A year ago, the SFC announced a regulatory sandbox to provide a confined environment for fintech companies to advance regulatory innovation. After a year at the latest HK FinTech Week, Ashley Alder, head of the SFC, announced that the city's securities watchdog has now established a new comprehensive set of regulations for cryptocurrency exchanges in Hong Kong. Cryptocurrencies and virtual assets traded on an SFC licensed platform will not be subject to the same kind of regulation that applies to traditional offerings of securities or investment funds. Alder said the rules are tailor-made for the crypto industry, covering all the key investor protection concerns, including the safe custody of assets, KYC requirements, anti-money laundering, and market manipulation. Concepts that don't exist in traditional financial markets like hot and cold wallets, forks, airdrops are also included. Additionally, all licensed platforms must have insurance covering the risk of virtual assets being lost or stolen. He stressed that virtual assets have been moving further into conventional financial markets and highlighted stablecoins in particular, saying that some projects are capable of being adopted extremely rapidly on a global scale, which has led to serious concerns among politicians and central bankers and financial regulators. The new regulatory framework allows the SFC to grant a license to exchange operators that wish to opt in to regulation. In other words, it is not mandatory for crypto exchanges in the city to acquire a license to operate. Alder explained that the reason for choosing an opt-in solution is because the existing legislation was not designed with the crypto world in mind. He believes that markets can wait until new legislation covers the entire virtual assets sector, although no timeline is provided. Given that many of the major crypto exchange operators have a presence in Hong Kong, we believe that there will be a handful of exchanges that will take the invitation to opt in to SFC's regulation plan. However, we do not expect to see a large number of exchanges rushing into the regulation net. The new licensing program states that exchange operators can only provide services to professional investors, which means still no retail services can be provided. As defined under the Securities and Futures Professional Investor Rules, Cap Point 571D, a professional investor means the following. An individual having a portfolio of not less than HKD 8 million or its equivalent in any foreign currency at the relevant date or as ascertained by referring to any one or more of the following documents issued or submitted within 12 months before the relevant date. Sorry about that. I had to put my phone on vibrate. A trust corporation having been entrusted under one or more trusts of which it acts as a trustee with total assets of not less than HKD 40 million or its equivalent in any foreign currency at the relevant date. That's only part of the definition. Nevertheless, it doesn't mean any retail investor will be involved. The new rules continue to make cryptocurrency trading in Hong Kong available to only a small group of investors and not the public. Alder stressed that the reason behind this is because virtual asset futures contracts, especially contracts with leverage, are volatile and could be extremely risky. How the SFC sees the nature of Bitcoin and other crypto assets is another highlight from the announcement, Alder clearly said. Bitcoin and the other more familiar crypto assets are not securities. He also stated that the SCFC only has the power to regulate a platform that trades virtual assets or tokens which are legal securities or futures contracts. SFC's stance is largely in line with other regulatory bodies in the world, such as the Securities and Exchange Commission in the U.S. The SFC crypto exchange regulation announcement came after China's blockchain initiatives, and we can expect that China and, broadly speaking, Asia will be front and center when it comes to blockchain-based crypto development. As crypto investment becomes more mainstream and the everyday application and usage of virtual assets rapidly increased, there is no doubt that a complete set of regulations for crypto assets is much needed. We believe that a well-regulated environment will benefit both investors and crypto industry stakeholders. The regulatory development in Hong Kong is considered a positive move for the overall crypto industry. And I agree with that. If there's regulations in one country, it slowly begins to overflow into the rest until eventually we have the regulations that we are looking for, hoping for, and needing in the U.S. Initiative including Microsoft, Intel, and IBM introduces token standards. The Token Taxonomy Initiative, the TTI, has unveiled a framework to standardize the construction of tokens. The initiative has made its Token Taxonomy Framework, the TTF, available to the public, according to a press release shared with Cointelegraph on November 4. The platform-neutral framework will purportedly provide a set of definitions for tokens and various implementations. The TTI includes a common set of concepts, definitions of tokens and their use cases across industries, a classification hierarchy, a composition framework, and other standards. The TTI's members include major tech, financial software, and blockchain firms, including Microsoft, Intel, IBM, CoinSensus, EY, R3, and JP Morgan. The TTF has provided 14 draft tokens to serve as examples that are portable across definitions from Adera, Consensus, Digital Asset, Enterprise Ethereum Alliance, the EEA, IBM, IO Builders, Microsoft, and R3. Marley Gray, the chair of the Token Taxonomy Initiative, the TTI, said the new standards will help facilitate cross-platform transactions, stating, whether it's a ticket, supply chain documents, stocks, property titles, loyalty points, or other as yet unthought of blockchain-based products and services, token use should be able to flow across platforms. If we want to take full advantage of what collaborative platforms have to offer, cross-platform transactions have to be able to communicate with one another. Standards are where that starts. Furthermore, the TTF aims to provide definitions that let business people describe a token based on its business requirements, while allowing developers to see which back-end requirements are needed to standardize the token across various networks. Different organizations, alliances, and consortiums have begun to introduce standards for the blockchain and cryptocurrency industries. In October of 2018, EEA announced a set of specifications to provide standards for developers using private iterations on the Ethereum blockchain. Following the release of the first version of its Enterprise Ethereum client specification the previous May. This summer, the American Institute of Certified Public Accountants proposed a set of standards for audit evidence, including data recorded on a blockchain. The Institute's proposal would set guidelines for how auditors and preparers consider audit evidence that is based on new technology like distributed ledgers. Last month, the Association of National Numbering Agencies, a global association of national numbering agencies, announced that it would examine the identification of digital assets and provide recommendations for creating global standards for the assignment of international securities identification numbers to digital assets. And this is definitely something that, again, I felt it was important as the last news article to get this stabilized so there can actually be more growth, and help investors and help the opposite side, the business side that's actually creating this technology for investing. Once you have the Token Taxonomy Act and all of these regulations in place, it's going to be a lot easier and probably more simplified, because then even the banks can do everything you're doing on an exchange, or possibly the exchange becomes the bank. Because most people now, or even a few years ago, there were so many steps to get the currency, then to hold the currency and transfer the currency to put it on your cold wallet, your cold storage. The average person is not even interested in that many steps. A 12-step process doesn't make sense to them. They want to go to the bank, deposit their money, go to the bank, and withdraw their money. They want to go online. They want to spend their money. They want to receive what they just purchased. It's very simple. They don't care how it operates or how it works. They just want to be able to use it. I mean, it's common sense. So all of this technology getting regulated and all of the new acts, the token taxonomy, are just going to help those of us who have been in this scene for a long time. Some of this news is it's still recent and current, but I had a new file and I'm finally getting through. My apologies. Ripple-powered payments giant reveals plan to reach 15 million people and 1.5 million merchants. Japanese financial giant SBI says bringing the Ripple-powered payments app MoneyTap to millions of users by partnering with the mobile payments company PayPay. There is more information on these. I'm going to breeze through. I just wanted to really touch up on the first two because I think they're very important for everyone who's been holding for a while patiently to know things are happening, things are coming. It's just a matter of time. What's next in the securities case against Ripple over XRP? That, who knows how important that really is, because obviously the UK and a few other countries have stated that XRP is a currency, even in the I'm totally blanking on my apologies. In 2015, even when the U.S. government labeled it a currency. Other places have labeled it like a hybrid token. But again, there's really not anyone who's labeled it as a government or as a country that it was a security. So we'll see how this plays out. I think we're going to start hearing something more. I believe it's a little more the beginning of this week, and I believe the deadline is first of the year. So hopefully this gets all cleared up and settled and just goes away. All right. AltCoins get the axe as Binance removes low volume trading pairs. Binance has delisted 5 altcoin trading pairs following low volume. The exchange says the delistings will improve liquidity and user trading experience. It looks at the point of this news article. Bitcoin is 8831.58. Ethereum is 187.63. EOS is 352 and XRP is 27.91 cents. Maybe those will start moving up into the single dollars by the end of the year and grow from there. Okay, a lot of people were aware of Swell, but not many people knew there was a double convention going on at the same time for Malta Week, the blockchain AI meets medical cannabis, bringing together thousands of investors and innovators in blockchain, artificial intelligence, quantum technology, big data, and the Internet of Things. This was happening the same time as Swell. And that's all I have for this video. I hope you're having a great day. This is not financial advice. It is for entertainment purposes only. As always, the links will be available in the description below. And I hope you're having a blessed day. Until the next one.